appropriateness.com.au studios, I'm CJ Dore. This video series is all about indicators, technical indicators, and the one we want to look at now is the moving average. So let's go and have a look at a chart. So lots of price action, big spike falling away here down to the bottom right hand corner. But let's apply our moving average to this. Now think about that moving average and average of all the movement. So let's go and apply it here, and there it is, the red line, that's our moving average. So it's a representation of all the movement. So let's just stand back and have a look for a minute, and it seems pretty fair. Let's have a look at that first quarter. Coming in from the left, lots of green, spiking up to the top, and all along that red line is moving up, just subtly, but it is moving up. Now let's isolate an interesting area here, and let's have a look where the price action comes through the moving average and starts to fall down, and on a permanent basis. It then pulls the moving average down. So that moving average is always a direct representation of the market or price movement. Now look what happens when it does fall through the actual line itself and on a permanent basis. All the action from there on is underneath our moving average, and it starts to fall down and really tapers away here as well. So a good indication of what's happening on this occasion, on this chart, when that price action started to move around and it turns, it stops, and it moves in the other direction. So a little hint that that could be what's going on in future. Sometimes it will cross through, but on this occasion, look what happens when it really does it on a permanent basis, and from there that action is all underneath. So there's an example of what the moving average looks like. So let's now go to another chart. We've applied a moving average here, different chart altogether, this time coming in from the left hand side. Look at all the green movement right up to the big spike at the top there. Now let's isolate an interesting area, and it cuts through. Now just go back a few days, it also cut through there as well, but it didn't stop, level out and turn up until it really got cranking and went up. Then all the action is above here. But what happens after it spikes? It turns around and it falls back through again. Now this is an interesting area here. It's quite confused. Lots of buying and selling, ups and downs, but not as dramatic as what we saw up here. Pretty much works all in this zone. And as a result, the moving average, the average of all the movement, look what happens, it just levels out. It levels out here, even though there's action up and above the line itself. So what we're doing is we've leveled out here. Now we're looking at where is it going to go from here in future. Is it going to spike up and really turn that average up and show us some action on a permanent level like we saw here, everything above up to that big spike. Now what we want to do is actually go and have a look at another chart here. Now this is quite confused. Lots of buying, lots of selling, lots of red and green, big red candlestick here, some green candlesticks over here. So let's have a look at what you are allowed to select when you choose a moving average. Now here we've got a 50-day moving average. Let's apply it here, and it's quite smooth like the other ones. Overall, yes, it does represent the market movement. Comes up to a big spike, levels out somewhat, and so does the price action here, falls down and it levels out and it starts to move up, bit of a recovery, but falls back again. So there's the moving average by way of a view of a 50-day moving average. Quite a lot of movement to take into account to create the average on this occasion. Let's move on here. Now we're going to stay with the same stock, the same chart, and the same price action, but let's now select 25-day as our period, so a 25-day moving average. So we've got less information to work with, so that should tighten up the moving average line relative to the price action. So let's apply it. There we go. Now look what's happened. Bit more of a roller coaster. So this time coming in from the left hand side, big spike again, falls away, somewhat of a recovery here, then it falls down. But look how the moving average line is much closer as a representation or in accordance with the price movement. So that's a 25-day moving average. Now let's go back to our selection panel here. This time we're going to isolate 10 days worth of price action or a 10-day moving average, so much less information to work with to create an average. Now let's apply it. Now look at that. It's really in accordance. Starting on the left-hand side, it moves up, comes up here, big spike, pulls it up, levels out, then cuts through, pulls that down. Now, the less price movement that you've got by way of days to work with, as an average on this occasion 10, it will be much closer to the market. Remember our 50-day moving average? Lots of information to take into account, so a much smoother average. Less amounts of information, less to work with, you'll be working much closer to the actual response of the market or the price. So there we go. That is our price action with our moving average, and a couple of different examples there of how you can select it. So the moving average, good way to apply it to your stocks to understand where things could be going from there.
So hope you enjoyed that. Happy trading. That's the moving average. I'm CJ Dore from the SharePrices.com.au studios.